Och då är det dags att välkomna vår internationella gäst. Det är Pernille Hohnen. Hon ska bara få på sig sitt headset här.
Okay, I'll just get this. Well, I'm Pernille Hohnen, and I am an associate professor at Roskilde University, and thank you for inviting me. I'm going to talk about digital credit, the financialization of everyday life, and emerging debt risks among young Danes. And I'm going to use examples from the Danish context as well as some examples from the international context. But I've tried to pick examples that also covers the Swedish situation. And I also think that the insights, the points that I'm going to make, that they also resonate with the Swedish situation. I have a background in social anthropology, and that shows in my work in the sense that I'm interested in the kind of cultural dimensions of our approaches to credit and debt and the process of normalization of credit. I'm interested in the words that we use, the way that we understand credit and debt in different ways because of this development that we've seen that we call the financialization of everyday life. And how these developments, which are basically linguistic and cultural, how they also create new forms of debt risks because it's difficult to grasp, particularly for young adults. I've done research broadly in this field for the last sort of 10, 15 years. And it means that I'm going to draw from different examples from this research. It also means that I'm interested in the development. So I'll try to incorporate that a bit in terms of the new generations of what we used to call payday loans. My presentation will sort of is structured in two parts. I will start with giving you a bit of background about the Danish situation so that you can follow the examples. Also go through a bit about the development of what I term normalization of credit. And then I will also present what I see as the cultural approaches that I'm going to sort of frame the empirical examples with. And then in the second part, I'll give you sort of two clusters of empirical examples of how I see that these cultural developments can be found empirically or concretely among first Danish young adults and their take on loans and credit and how they struggle to figure out what they mean. And then I would like to move into the more recent buy now, pay later loans in Swedish. They are betal senere, something like that. Köp nu, betal senere, yeah. Klarna and those. And I see them as the second generation of the very expensive payday loans, even though they're not called that. And finally, I'll try to sort of wrap it up and give some concluding remarks, and then I hope that will sparkle some discussion. So throughout this, I'll try to address the three key questions. How does the normalization of credit, financialization, change the understandings of credit and debt? Why are young adults particularly vulnerable, and how do recent credit products work, and what are the main future challenges? So in a Danish case, or the background is that we've seen sort of a continuous problem for young people in terms of both risk of debt, default debt registering, and also payment problems. And the situation or the development is a little bit difficult, sort of it's a little bit muddled, because on the one hand, we've seen a decrease in the number of registered young adults in the RKI, the debt registers. On the other hand, we've seen a rise in payment problems among, so it's even if they're not registered, they still have payment problems, and we've seen that recently. We also see a rise in debt registers among the youngest age group, so that's it's a new tendency. The 18 to 24-year-old to 22-year-olds, they are increasingly registered as default debtors. So it's a little bit a muddled picture, but it broadly paints a picture of young adults as being in debt risk and as having debt payment problems. And I think that resonates with the Swedish situation. We see about a quarter who have these consumer loans, instant loans, but the rest are also normalizing credit. I mean, they're using credit forms in different ways, but they're less visible than the consumer loans. And then, as I said, I think that 10 years ago, we were struggling in Denmark with the very high interest rate payday loans, the blanco loans, or in Swedish, where we had rates up to 700 annual percentage rates. And this was regulated in 2020 in Denmark. And loans above or having above 35% annual percentage rates, they were forbidden. And it was forbidden to market loans over 25%. And so it's a little bit similar, I think, to the recent sort of Swedish initiatives. It's difficult to say how much it has influenced in terms of debt, but what we can see is that the marketing of these loans has disappeared. And we can also see that buy now, pay later loans have taken over. So that's the situation. But basically, the payment problems, I think, remain more or less consistent, but they are sort of approached in different ways. And yeah. And also a little bit on the prevailing explanations, which I think the previous presenters has also talked about, that there is a tendency to sort of two types of explanations here. The one being that this is an individual problem, that it's a kind of a breach of morality, or it's kind of a sign of hedonism or lack of self-control, financial illiteracy, or the other being that a part of the loan market is sort of scapegoated, so that we just focus on those very difficult, the very high interest rate loans, predatory loans, whereas the whole normalization and the way that credit sort of takes up a very important, significant part of life for young people, also for the rest of us, is sort of glossed over in a way. And my sort of take here is with this more social-cultural approach to say that debt problems should be seen as related to the development of new credit products and this normalization and how we talk about it and maybe don't talk about it. In terms of youth life, just a few words. It has been mentioned already, some of it, but the fact that youth life is a kind of a liminal phase in life. It's characterized by unpredictability, and there are many shifts, and this makes young people more vulnerable because they end up in situations that they can't foresee. Change of partners, change of housing, change of education, which suddenly brings them in a situation where they have to act, for example, try to find down payment for an apartment or something like that. So in that sense, we see a kind of a specific vulnerability among this age group. We also see what Lars talked about. I think a commercialization of sociality. It's difficult not to go out with your friends, and as much sociality takes part in commercial environments, then you need money for that. And we also see an increase in psychological diagnosis, and I don't know if that's the same in Sweden, but this, I think, is a significant development in Denmark. In terms of this overall development of credit use in daily life, I think that this is, as I said, I think that this is a very important sort of background for this, for the over-indebtedness or payment problems. And so just a few words, if we look at this from a as I said, as a cultural perspective, we know, most of us know that since in the 90s, and I believe in Sweden it was since the 80s, but we've seen this process of liberalization, deregulation of the housing market, where new mortgage loans became available, and the home became sort of a means of consumption rather than a means of savings. And in sort of cultural terms, it also means that in a way, consumption has been cut loose from income. So we think about it in a different way. We think about the possibility of consumption rather than having the money to consume, and that's a different. That's an important difference. And this way of thinking has then gradually moved into other parts of the loan market. So we have seen or witnessed this range of new types of payday loans during the last decade or so. So we see how this has also drawn in new groups of consumers, and in particularly the young consumers. We also see a development where, at least in Denmark, where we see a decrease, as I said, in sort of the significance of the high interest rate loans, and then moving over to new loan forms which are more characterized with the deferring of payments or division of payments, and they're exemplified in the buy now, pay later loans. So sort of what is interesting here is that that when we look at credit, the way that credit has become a market, and when we talk about sort of a credit card-like economy, this is a kind of a qualitative shift, a shift in the way we think about money, and that has some social consequences. So we have seen a transition from consumption for money to the consumption of money, and an increasing reliance of credit, and a kind of a way of tackling our life where we are not really so interested in paying out, paying back, but more interested in sort of keeping the credit, revolving credit lines, and navigating in revolving or changing credit lines as a kind of a competence. And then you can say that finally this change also has meant that credit has become a means of maintaining relations to consumers via specific infrastructure or digital devices. So there's also a kind of a market element in this. The interest is to keep the consumer active, so to say. So just a few words on these cultural. What do I see as cultural approaches? I think there are sort of two dimensions. There are more, but for today, I think I will present two sort of takes on this. The first is the morality or the moral aspect, moral discourses of credit and debt, and the other is the way that changing credit products change our thinking and understanding of the difference between having money and owing money, or the zero. Where is the zero? In terms of moral discourses of credit and debt, it's important, I think, to understand that the words for debt in nearly all languages are synonymous with sin or guilt. So it comes from German Schuld. It's very clear. Debt and sin bears the meaning of both offense and the obligation to make restitution. In Danish, it's a little bit less clear because we don't say skuld, but we say gæld. But when we talk about a debtor, then we call it a skyldner. And I think that carries similar connotations of both we owe money and we're guilty. And in Swedish, it's more clear, I think, skuld and skuldsättning, and that has the same kind of connotations of guilt built in it, and it makes it hard to talk about debt without having these moral connotations. So that's why we can't sort of separate it. So the language is simply morally invested, so to say. And the other sort of overall cultural approach here, I think, is the way we use the words when we talk about credit and debt, because that has changed. First, we can say that the kind of credit card society or credit-like payments, they complicate the boundaries between credit and debt. That has nothing to do with language, that's just the way they work. So firstly, we can say that the credit card logic sort of installs a series of preliminal, liminal, and post-liminal phases between credit and debt. And what I mean by that is that we can obtain credit, but we can be in a situation where we have gained the right to credit, but we haven't used it yet. We just have the possibility. Or we can have used the credit, but the payments are not yet due. So we are in a situation where we actually don't have to pay it, but we have used it. So these what does this mean in terms of our understanding of where we are in our financing, in terms of how much money we owe and how much money we have? And then I'll get to that in a minute, because although this has changed, so we operate with credit products that are not clear cut in terms of where we are in this sort of this line between credit and debt, but at the same time our moral connotations have not changed. So we still have a kind of a moral hierarchy where those in debt, they're the bad guys, and those who are sort of not have debt, they're the good guys. So the kind of the basis for this is that we have to operate with these gray zones in credit, that credit granted but not yet obtained, credit consumed but not yet due, credit which is not supposed to be paid back in total, and even credit that are not supposed to be paid back at all, because some of the loans, recent forms of loans, are only interest loans, so you're not supposed to pay them back. We also can talk about loans as speculation, for example, low interest rates, loans that are then used to speculate for higher interest, or we can speak of loans as a form of payment. So recent credit sort of developments create a large space of interpretation in all these. How do we fixate on loans? And we still use the word for credit for what we consider to be good debt, and the word for debt and the word of debt for the bad credit, and that confuses most people, but particularly the young, unexperienced consumers. And I'll give you some examples from, as I said, some empirical examples of the usage of the words for credit and debt. And they are based on, the first part here is based on interviews with young people between 18 and 30 years old. And I've tried to select a few quotes that reflect the changing meanings of debt and loans, and sort of highlight the risk of debt that this confusion invokes. So the first one, and this is a young Danish woman, and she's trying to buy a phone, and she says, "I told the salesperson that I considered buying this phone on credit, and then she looked me up and said, well, it looks okay. So apparently I'm credit worthy. But honestly, I don't quite understand why when I look at my bank account. In my opinion, it should raise concern somewhere." And it's one example of, I mean, this is not really the wording, but still it's the understanding of, when am I credit worthy? What does it mean? And I also think she's looking for a kind of a clear-cut meaning which doesn't exist. Because with these in our sort of society, credit work as a mediator, and there's not one fixated point where you can say that there you have kind of, now you're credit worthy. It depends on an interpretation which she doesn't understand. So it makes it difficult to estimate how much money one has. And the next one is, it's a word for credit that is used instead of loan. And here it's about credit products. If I would take a loan, it would be like accepting that I was out of control, or that I was spending too much money. But with an arranged overdraft, it is possible to say, well, it's just because it's a bit difficult this month and we pay it back the next. And this characterized some of these interviews in terms of that it relates to the kind of scapegoating also that I talked about before, and the morality that sort of circumvents the loans and debt moral space, where the words associated with credit sort of becomes a tool of moral whitewashing here. I mean, if we can call it something else, if we can call it overdraft, then it's not a loan, and then we can escape this sort of moral stigmatization. And I'll come back to that later, but I think that this process is also it's used in the industry as a way of presenting credit loans to not only young people but to the public, deliberately trying to call it something else, deliberately trying to call it not to call it loans. And then there is the idea of overdraft, which was very popular among the young people that we interviewed as a way of getting credit. And here we also see a kind of a different type of confusion, where overdraft is interpreted as a financial buffer, and where loaning money is confused with having money, the way this can be interpreted. I see it, arranged overdraft, as a buffer that is a kind of disposable money, because it always gets back to zero again. There is a bit of magic here. I thought I didn't quite understand, but but maybe it's easier to pay it back if we call it arranged overdraft. Or it depends on your disposition, but you tend to aim to pay it back again. Therefore, I would say that it is at my disposal. So there is, again, can you see that this confusion in terms of what kind of money are we talking about here? I mean, is it a loan? Do I have them, or have I loaned them? So and I think that signifies this confusion. And in a way, it's a linguistic, but it's also a confusion of meaning. What kind of loan products are we talking about, and what are their implications? So if we sort of sum up that part, then cultural understandings of cultural understandings of credit and debt, then young adults use a range of credit and loan products, but they are confused about credit evaluation, and they categorize the forms of credit in moral terms, but they do not see the good forms of credit as leading to debt. So they don't make that link. And the usage of credit, the usage of the word credit or words associated with the good part, which doesn't lead to debt, is expanded, both in the industry and also for the young people themselves. And then they tend to see credit as a buffer or security. So that was sort of the first part of the empirical examples of what I see as a kind of a cultural, categorical, linguistic confusion that is sort of characterizing this normalization of credit also. It's not only new parts of loans, it also creates new ways of categorizing and new ways of understanding or maybe not understanding these loans. And then I would like to take this up with the buy now, pay later loans, because as I said, I see them as a second generation of the high interest loans, even though they're not called that. So they're a new generation of payday loans. And I don't know if you're all familiar with them, so I just made a slide with a sort of a few points, because it's a form of credit that delays or divides payment into smaller parts, where the shop makes an agreement with a third party. It could be Klarna or internationally Afterpay, and providing credit to the consumer and pays for the purchase. And the shop sort of enter into some kind of agreement with this third party in terms of payment a percentage or otherwise. But it's Klarna or the third party that enters into a negotiation with the consumer, and it's also handles the payment. So it's a third party that is paid by the consumer also, or that the consumer has to pay back. And it's marketed as interest free, and it doesn't have interest rates, but it has fees in when you don't meet the scheduled payments. And just really briefly, these are international figures, and what's interesting about them, I have 2 slides on those, is that this is from the can you see the purple pillar? That's 2024. And if you find the buy now, pay later, they're over here, then they amount to a rather small amount of the total payments. But if you look at the growth rate, and that's Sweden over here, and the green one is 2020, then the annual growth rate was 23%. That's a lot. And so I see these as really rapidly increasing. And just, oh, wait a minute. How do I get it back? I get it back. And these are international figures. We don't have much research on this in Denmark, maybe more in Sweden. But from what I've found in a recent Danish research, they more or less resemble also the Danish sort of, at least the tendency, that most of these users are young, 18 to 34 years. Most are women. They use these payments to buy sort of everyday consumer goods, digital devices, personal care products, furniture, things like that. And in this is an Australian, no, this is a British research study. They say that the majority find that they buy more than they otherwise would have done if they had not been able to use buy now, the buy now, pay later. In a recent Danish research, actually a large part of the young people that use these products regret that they have used it. So it's even sort of more, I think, more sort of severe than in this. And the Danish Consumer Council made a calculation where they found out that with a buy now, pay later payment for a 70 kroner pizza, and these are Danish kroner because otherwise it would have been a cheap pizza, I think. Well, with a buy now, pay later payment for a 70 kroner pizza, if you don't pay your fees for 60 days, then you are at 720 kroner. So maybe they're without interest, but they're not without fees, and that should be taken into consideration. And then I have a few quotes, and these are from an Australian study. But I think that they are. I think that they probably resemble a more sort of general trend here, also in terms of how they are marketed and also how they are understood. And what I think here is it's also that they sort of deliberately strategically target young consumers and sort of tap into the way that young consumers sort of experience their finance and the rest of their social life. So the first quote is, "I've always thought that kind of credit cards and the way that it's structured is really, really predatory." And then I started thinking Afterpay and ZipPay were different from that because it wasn't really associated with any bank or loans or finances. I thought that was a safer way to engage with getting a loan because it doesn't even feel like you're technically having a loan. So again, we see this, well, it's not really a loan. And I also can sort of circumvent this whole getting into a bank and formally getting a loan. So that's sort of one experience, a part of this. And I think the next one is gamification. That this is also reflected in this young woman who says it's kind of what Spotify does. So kind of like, and on this day, like a Facebook birthday thing, but for your engagement with Afterpay. You know how Spotify does. You looked at this genre of music, and here they were like, you looked at mostly fashion or baby or things like that. And out of each category, this was your favorite store, and to remind you to buy more on Afterpay. So it's like a gamification of your shopping here that we see, and that is communicated. And I totally forgot to say that, but the buy now, pay later loans, they are depending on that you download an app. So it's also digital, it's mobile, it's a kind of a way of shopping and kind of using a device that is sort of very popular among young people also. So in that sense, it also resonates with the way that young people sort of the rest of their everyday life, as do being on Spotify or Netflix or these sort of annual reports and Spotify Wrapped and so on. And then that sort of resembles this here. And then the last one, recognition and guidance. It is as if these sort of these providers or loan providers, they act as a personal friendly, guiding. It's positive. The second the money comes out, I get a thank you email and a notification on the app. It's like you have this many payment left. This is how much you've paid. This is how much you've left to pay. You will still be paid in full by the state. I don't have any of that with my credit card. I just get a no-caller ID calls to be like, you've missed your payment. I'm like, I didn't even know I had a payment. I feel like there's no set schedule to it. And the idea is, it's guidance, of course. It's very much recognition, thank you. It's personal, it's friendly. And so in that sense, it's also a way of communicating that's very different from at least the way that many young people experience the communication with more formal loan institutions. So just to sum up, with the buy now, pay later loans, it's marketed as a form of payment and not as a credit or loan. Buy now, pay later products specifically target young consumers by developing products and communication reflecting their consumer patterns and identities in the way of using apps, recognition, guiding, friendliness, so on. And the young see these products as more democratic and less formal compared with bank loans. And the whole idea of gamification also resembles, as I said, the thing with Spotify, and sort of taps into the digital arenas that they're used to. And the caring friend in communication with consumers. And it also becomes unclear. It's unclear to many young consumers that fees are added and how many fees are added. And so the last slide, to try to sort of raise some of the concerns that I've sort of tried to raise. We see this gradual normalization of credit, and the expansion of the usage of credit instead of debt creates a kind of a blindness towards debt risk. And that these gray zones make it difficult for citizens to see the boundaries between having money and owing money. And that debt risk can be related to these changing concepts and understandings of credit and debt. And also that there seems to be a kind of a moral hierarchy where some loans are stigmatized, but where others are neutralized or even in a way whitewashed, or that they're sort of they're presented as not really loans, as a good, not even a good form of debt, but increasingly. And I think that with the buy now, pay later loans, it even moves further from, from the earlier phases where you still talked about overdraft and credit and interest rates, and now they're just, you can just pick them as a form of payment when you pay. And when I saw it first time, I thought, well, how did they manage to do that? I mean, because it's, how can this be a form of payment when it's a loan, and how can it be allowed even that you can present a loan in this way? So yeah, and I think that we have to keep an eye on this, because I think that this will be growing, and this will lead to increasing debt among young adults. Yeah, and so basically, what what I think is interesting here is that when we talk about the normalization of credit, then it creates new loan forms, or new way of understanding, or even a new technical sort of constitution of credit and debt that also then leads to confusion in terms of how we should cope with that and understand that. And I think that is essential to understand, because it creates this blindness and makes it difficult for young people to see through these risks that are associated with both the new payments and debt. So, yeah, thank you.